I do have clients that things have gone wrong. Things have gone very, very wrong in the family. And so what happened is the parent wanted the child to cancel the policy because the parent said, I don't want you to have anything when I die. I want to make sure we are leaving you broke because you are a rotten child. And the parent can't do that. Hello, and welcome back to the podcast. Thank you very much for being here. I appreciate it. Okay, let's talk about ownership of a policy today. It has been brought to my attention that this is a very common question. When my assistant is doing applications, people are asking about ownership. And rightfully so, because you guys are not life insurance salesmen. So here we go. An owner. There are different parts to the policy. And because people are not taught about life insurance, this can be confusing. So number one, you have the insured. That is the person who the insurance company is insuring. If that person dies, death benefit gets paid. Okay? The second portion of the policy is the owner. So the owner is who owns the policy. That person pays the premium. That person decides who the beneficiaries are. That person gets to use the cash value. If I am not the insured, but I am the owner, I have 100% control of the policy. The insured has zero control. The owner also decides who the beneficiaries are. The beneficiaries are the people that get the money upon somebody's death. So, if I am, let's just say that I am the owner and I am owning a policy on my son and daughter-in-law. Okay? I own a policy on my daughter-in-law because she is part of the business, let's say. Well, what happens if they get divorced? Do I still own the policy? Absolutely, I do, because I'm the owner. Their divorce had nothing to do with my ownership of the policy. It is not an asset of hers, it is an asset of mine because I'm the owner. So let's think about like a house. You own the house, but other people live in it, right? You get ultimate decision on what to do with that home. You get to decide who you're going to leave the house to in the estate plan. You get to pay all the bills. You're the only one that can borrow against the equity of that house. Now, let's say that I own a policy on a business partner. Well, it's the same thing. I own it. It's my asset. I get to borrow against it. When that person passes away, then I can file a death claim and I get some death benefit out of that. So if you guys heard, and if you've listened to podcasts and listened to any of Nelson Nash's videos, go to the Nelson Nash Institute YouTube page and go listen to Nelson. He had multiple policies on business owners. So when he was, or with business partners, when he would buy land with somebody, he would buy a policy on them right away. So upon his death, there were two people that he had policies on. And guess what? Those people were still living. And so one child got one policy and another child got another policy. And so when those people pass away, then the family can file the claim and they will get the death benefit. And so what happened is Nelson was the owner, but he passed first. So what he did is he left it to a contingent owner. Somebody that he chooses to leave it to. It could be anybody. He could leave it to Winnie Pooh if he wanted, right? The insurance company doesn't care. It doesn't have to be family. He could have given it back to the family of the insured. But the owner is the one that has absolute 100% control of that policy. And the reason that I love this is because let's just take business partnerships. And now let's say that I have a business with John Doe. And John Doe and I have policies on one another. And I own the policy on him and he owns a policy on me. And all is great in the world of our business partnership until it is not. And then all of a sudden we can't stand one another. And John Doe and I separate our business, but in the process of doing that, I got the short end of the stick. I was tired of fighting with Mr. John Doe, and I said, fine, I will just let you have more of the business because I just wanted it over, right? A bad business partnership is like a bad marriage. Let's just get it over with. We could fight about it forever, but is it worth the stress? I love this because I have a policy on Mr. John Doe. So if he gives me the short end of the stick, then when he dies, I'm going to get some of my money back because I have the death benefit. If he dies after me, my family will have the death benefit because I will make them contingent owner. Now, if I die first and they're contingent owner, they have to keep paying premium if premium is due on that policy. They can decide to do a reduced paid up and end premium. You're not going to want to cancel the policy for the love of Pete. If you get a policy or if you inherit a policy, do not cancel that policy and cash it out. That is silly. That person's going to die. At least wait until they're dead and then you can go file the claim. But in a bad relationship, even in a bad marriage, in a bad business, I don't do it. I rarely do it. I don't want to say I don't do it, but I rarely do it in my office that a husband and wife own on one another. If it's a husband and wife, they own on themselves. So if one of them dies, it just goes to the other spouse. But in the case of a divorce, it would be very nice if they owned on one another. Because I have had some clients that ended up divorced, and then one of the spouses cancels the policy, and the other spouse is like, well, that's really nice. So you're going to die and leave our kids with nothing? That's brilliant. And so it is nice to have ownership of one another if that's the case. I own all the policies on my husband because I'm the one that deals with the financials. And so if it is somebody that's dealing with the financials and the other spouse is 100% removed, they don't care, they know about it, but they don't care, then I'm like, hey, let's just make you the owner of all of these because you're the one that's dealing with the numbers and the finances and the bookkeeping and all the paperwork for the family and yada, yada, yada. So you definitely, ownership is important. And what we're buying the policies for is equally important. But whoever owns the policy, it is your asset. If you go to the nursing home, they're going to look at it as your asset. So if you own a policy on mom and dad and they're 90 and you're 70 and you're in the nursing home, that's your asset. And they haven't died yet. So you want to make sure that you are doing what you need to for estate planning purposes around that as well. Here's another thing. If you have a business, you don't necessarily want the business to own that policy because now it's an asset of the business. And if you break up that business partnership, guess what? That asset stays with the business and then that has to be bought out. So there's really no recovery of a bad deal or a bad breakup in that situation. So make sure that if you want to be owner because you want ultimate control, then you want to be the owner of that. But once you own it, there is absolutely nothing that can be done to get you to cancel that policy because it's yours. I do have clients that things have gone wrong. Things have gone very, very wrong in the family. And so what happened is the parent wanted the child to cancel the policy because the parent said, I don't want you to have anything when I die. I want to make sure we are leaving you broke because you are a rotten child. And the parent can't do that. The parent can't cancel the policy. The parent can't talk to me about the policy. The parent can't talk to the life insurance company about the policy. Here's the thing. The owner of that policy can make anybody the owner of that policy at any point. So if mom really, really wanted to get nasty or dad really, really wanted to get nasty and say, I want that policy canceled. I'm taking you to court because you're the owner of it to cancel it. They could have switched ownership of that policy and they're no longer in control of that policy. They can make that policy owner anybody they want. The owner of the policy can sell the policy. They can sell a policy and you can get paid for cash value. So owners have ultimate control. Death benefit comes to the owner of the policy or whoever the owner decides, income tax free. That's what we have for ownership. It is fantastic. Fantastic. So please let me know if you have further questions on that. And I don't think I've ever done a podcast on this. And clearly, this is why people are confused because I should have done a podcast on this a long, long time ago. All right, you guys, you let me know if you have questions, comments, concerns. MaryJo@withoutthebank.com, or you know what to do. Go to farmingwithoutthebank.com, grab your book, and then schedule your appointment. Okay, you guys have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.